Let's cover some journal entries and make sure that we've got ALORE down perfectly. I've got ALORE written on the right hand side of the board where it has the increases, assets and expenses increase on the debit side, liabilities, owner's equity and revenue increase on the credit side, and then for the inverse, in order to decrease an asset or expense, we're going to credit it. In order to decrease a liability, owner's equity, or revenue, we're going to debit it. I've written 4 transactions on the board and I will read them aloud and we'll go through the journal entries. Number 1 says we purchased a car for $30,000 with a $10,000 deposit and the remainder on a bank loan. The first thing that we need to do is pick out the accounts that are involved in this transaction. What did we gain from this transaction? We gained a car at $30,000. It also says we paid a deposit. That's going to involve cash account because we paid that money going out. Then we've got a bank loan. So I've identified the accounts that are involved. Now we need to classify them. A car and cash are both going to be classified as an asset. They can provide future economic benefits to us. And a bank loan, that is something, debt that we owe to somebody else, that's going to be classified as a liability. And then we need to discuss if they're going to be increasing or decreasing. If we purchased a car, that means we're gaining a car, so we're going to put an increase above there. We paid a deposit, that means cash is going out of my pocket, I'm giving it to somebody else, so I'm going to decrease that asset. A bank loan, we're acquiring a bank loan, so we're going to increase that liability. Okay, so then we look at ALORE and it tells us we increase assets on the debit side, so I'm going to list car as my debit for $30,000. I'm going to use that K to represent those last 3 zeros. Then I've got a deposit that's decreasing, which we said was the cash account, decreasing. Assets decrease on the credit side. So I've got to decrease cash, so I'm going to credit it. And how much did we pay? $10,000. And then our final piece is the bank note. It is going to be for the remainder, which would be the $20,000. It's classified as a liability. It's increasing. ALORE tells us liabilities increase with a credit. So I'm going to put bank note for $20,000. If I add up both of my credits, $20,000 plus $10,000, that equals the $30,000 that we've got as our debit in the car, so we're good to go with that entry. Let's move on to the second entry. Paid $2,500 rent for July. Whenever we paid somebody, I'm going to pick that out as one of our accounts. Paid, that involves the cash account. What did we pay? We paid rent. Okay? Cash, again, is an asset. Rent is an expense of the period. We've got expenses down here. So we're paying money, which means that asset is going out of our pocket. So I'm going to put a decrease. We're just starting this expense, so I'm going to put that expense is actually increasing. We're paying rent, we're increasing our expenses. ALORE tells us that rent as an expense that's increasing needs to be debited. So I'm going to debit rent expense for $2,500. And then cash is an asset. Assets decrease on the credit side for $2,500. Moving on to the third one, we sold merchandise on account for $500. Again, we're going to pick out the accounts that we believe to be involved. Whenever we make a sale, it says we sold merchandise. That's going to be what we're in business to do, so that's going to be our revenue account. Whenever we've made a sale, that means that we are increasing our sales, so I'm going to go ahead and put a positive sign above here. And then it says on account. Cash isn't involved in this case. It's going to be that word where we're going to be receiving money in the future, accounts receivable. If you'll recall, accounts receivable is classified as an asset. Okay, so we're going to be gaining money. We're increasing our receivable account, so that's going to be an increase as well. So this was our accounts receivable is classified as an asset. Assets increase on the debit side, so I'm going to debit accounts receivable. And then we discussed that this was going to be our sales revenue account. It's classified as a revenue. It's also increasing. ALORE tells us that revenues increase with a credit. So I'm just going to put sales and credit it for $500. Both our debits and our credits match. So let's move on to the last one. We paid employees $6,000 for a weekly salary. Let's see, whenever we pay them, that's money going out, so that's going to be the cash account. And it's going to, whenever we're paying somebody, that means money is leaving us, so we're going to decrease the existing amount of cash that we had beforehand. And then we're paying our employees their salary. Salary is an expense of a business. We're going to increase this. It's treated similar to rent. We're increasing our expenses, so I'm going to put an increase right here. Salary is being increased. It's an expense, so I'm going to debit it. Salary expense is $6,000. We paid them the money. Money was leaving our account, so cash is an asset account. It's decreasing with a credit. So I'm going to credit the cash account for the same amount. Our debits equal our credits, so we're good to go.